Life Insurance Secrets Revealed by Verified Advisor Javaughn Spencer. Let's jump on in here because this is a huge one, guys. Mortgage protection life insurance. There are so many different variations of this. This is life insurance for your mortgage, mortgage protection. Yes. What is mortgage protection life insurance ideal for? Is for families that have a mortgage. This is for families that have a mortgage that don't want their family to be homeless after they pass away, after death. Families that don't want to lose the equity that they worked so hard for in their mortgage or their property or multiple mortgages. These are ideally for your homeowners. You see a lot of targeting to homeowners with this. Really, really important, because at the end of the day, a key strategy with mortgage protection is that the bank is going to be looking for the next monthly payment. Some people, like myself, want to make sure that balance on that mortgage is paid off using life insurance. It's not really common for the life insurance to completely pay it off. Most people want it to completely pay it off, but it's not so common as people will believe, because age and the cost and everything is a factor. But it's definitely a great place to put a plan so that they can sell the home, which is hugely popular, downsize, very, very popular, just to have money that is outside of the income that is no longer there. Most of the families that get mortgage protection life insurance, they already have life insurance in place, but that life insurance is for their income replacement. That life insurance is for another use, might be for their final expenses. That life insurance is for something completely different. This life insurance is about the mortgage. My name is Javaughn Spencer. My wife and I, Bridget and Javaughn, are verified advisors here in Beaufort, South Carolina, with our two sons, Darion and Brendan Spencer. And I love this because I want to make sure I always identify myself. You have my national producer number, which is like my social security number when it comes to life insurance and protecting homeowners in 48 states. But the bigger statement, I protect families from homelessness. And it shows the companies that we partner with in our brokerage, because we own our own brokerage, our own virtual agency. And those are the companies that allow us to serve you guys. My job with this is to protect your family, protect your income, and protect your family from homelessness. That's the whole point of mortgage protection. I love this. Mortgage protection life insurance is life insurance designed specifically with the mortgage in mind. Guys, it's not to pay the mortgage company. It's really to pay your beneficiary, pay the family that's left back, pay them so that they can continue to decide if they want to make the payment, if they want to downsize and get a rental. It might be too much upkeep for your loved one to stay in that home. It might be too much of memories in the home for them to want to stay there. But they need money to be able to make those wise decisions. They don't have to move the same day, the same week. They don't have to move after the funeral or anything, but they need to have the option. And all mortgage protection does is give you cash and options. Let's go over term versus permanent, because this is very, very important when discussing mortgage protection life insurance. First, let's go over what term is. With term policies, it will not pay a death benefit if you live longer than the selected term. If you have a 10-year policy, 15-year policy, 20, 25, 30, we even have 40-year policies. If you pass away outside that time period, the policy won't pay out. Mortgage protection is really good on term policies if you're younger. If you're younger and if it's affordable, that's really good on term policies. I would say younger. When I would say younger, I would say 30 to 45 years old. 45 is kind of pushing it. Let's go over the other benefits of it. Term is less expensive because it will eventually end and it does not build a cash value. Well, that's not a bad thing with mortgage protection, because if you have an asset that you're protecting, you don't need it to last forever. If you have a 30-year mortgage and you're 35 years old, it could make more sense to put a 30-year term policy for your mortgage protection because after the mortgage is paid off in 30 years, you have additional coverage to do other things with, or you're investing in additional permanent policies at the same time. Term is still on the table depending on the situation that you're facing with mortgage protection. Term does not build a cash value. Well, guess what? You're building equity in your home. You don't necessarily need to have a cash value build up if the goal for this is mortgage protection. Term will not qualify for certain health conditions. This is huge. This is probably one of the major reasons why people may not be offered term, because they may have a health condition that does not allow them to qualify for term. Some carriers offer living benefits like chronic, critical, and terminal illness protection. Great things. I just want to make sure it's not such a big X on term for mortgage protection, because depending on the situation, term might be a great fit. And that's what we need to discuss when you speak one-on-one with an advisor. Permanent, on the permanent side of life insurance, it's guaranteed to pay a death benefit when you pass away. Guys, when we go permanent, very seldom are we focused on the entire mortgage payoff. 99% of the families I've helped over the last few years, no one has done the full mortgage payoff, because once you think about it, the family don't necessarily need the whole mortgage paid off. But with permanent, we kind of focus on how many months, how many years of mortgage protection do they need in place to transition, to get on their feet, to be able to get the pension in play, to get the retirement funds, like all the other things in place. And the reason we like permanent is because we don't know when we're going to leave this earth. So we say we have a mortgage protection plan that protects you for your entire life, and you know that when you pass away, your family has 4 years, 5 years of the mortgage payments in a policy that when you pass away, the clock starts then, that they have 5 years to live mortgage free because you have that permanent mortgage protection policy in place. That's humongous. Most of the time I see more 2-year plans. Some people give their family a year to get their affairs in order to where and that's where they can afford. You can structure that, but this is even more common to go ahead and have a permanent plan, but focus on the critical period, focus on the immediate time after passing, because the mortgage company is not going to call you, say, hey, I need $200,000 by next Tuesday. They're going to say, hey, we committed to 30 years of $1,000 a month. We need the next $1,000. And that's best built on a permanent vehicle. Another thing, it's less expensive when you lock in the price at your current age. So permanent is less expensive the sooner you do it. Permanent does build a cash value that you can access while you're alive. So that's really great if you ever needed to borrow money at your policy to even pay your mortgage. You can do that. Easier to qualify for with certain health conditions as well. And some carriers offer living benefits like chronic, critical, and terminal illness. So I would more than likely bring up permanent for 45 years old and older, depending on the situation. Maybe a combination where it's half term, half permanent. We can do that as well if you qualify health-wise. So many different variables that every case is going to be different, but I just want you guys to know what's available and how it can pan out for you. Here are some questions that I love to ask, and I want you guys to think out there and bring the answers to the appointment. I would always ask, how long would you want to stay in the home? How long would you want to stay in your home, and why? I don't ever want to leave, or I don't want to stay here without my spouse. And I ask why. It's because I don't have anywhere to go. My family's here. My children are here. If you answer these questions, you would understand if the mortgage protection is even a need. Mortgage protection is not a need. You'll find out really quickly by here. How long would you want to stay in the home? Why? If you can't afford to stay in this home, where would you go? That's a big question. If you couldn't afford to stay in this home, where would you go? And we just have to really be honest with ourselves now so that we're not devastated later when that time comes. What type of impact would that have on your family? You're the breadwinner. You didn't come home last week. What would change with your family? Could your child go to college? Could your husband pick up where what your income has lacked because you're no longer here? Will then life insurance that you have in place be enough to continue on? How many months could you stay in the home with the money you have in savings right now? Could you stay a week? Could you stay a month? Could you stay a year, 2 years? If you have enough savings that you don't need mortgage protection, then I'm going to tell you, don't get mortgage protection. No matter what the ad says, you don't need it. If you know that after 2 months, 3 months, that your family's going to be completely stressed without your continual income because savings may have depleted or life does, that's where you might need to find out how much you can afford for mortgage protection to protect your family from being homeless after death. How many months could you stay in the home with the life insurance you have in place? Like I said earlier, most people have life insurance that are considering mortgage protection. And I'm not talking about life insurance with work. I'm talking about private life insurance that's not impacted by your employer. If you have life insurance, how long could you stay in the home with the life insurance you have in place right now? Or is the life insurance that you have right now just for final expenses? Maybe it's just to replace your income and it's not enough life insurance in place right now to be able to pay the mortgage and all the bills and continue on with life. These are questions you have to ask yourself before diving into a mortgage protection plan. Why are you looking at this type of coverage? Why are you looking at it? Is it that the death benefit? Are you needing the living benefits that's available to you? And my last question for you guys to think is, what would it mean for you to have this type of protection in place? Would you be able to sleep better? Would you be able to know that your family not to be homeless as they're grieving you? How much is that worth per month to know that that's in place? Your final goodbye is that they're not homeless while grieving. Let's go over some policy profiles. And like I said, health is extremely important during the policy selection process. While we're figuring out what you will qualify for, just understand health is the most important thing here. Let's take this plan, for instance. This can be on term or permanent. So depending on which one you're comfortable with going with, but as long as you're healthy, you'll be able to start at the bottom with death benefit. You pass away, it pays out. Chronic illness, Lord forbid, if you're unable to do 2 or more of your activities of daily living for 90 days or longer, you can't bathe yourself, dress yourself, feed yourself, hold your stool or walk. If you can't do 2 or more of those for 90 days or longer, well, then you can access a portion of your death benefit up front to use it to live on. The insurance companies know that if you can't bathe yourself and dress yourself, then you can't create an income. You can't work. So you use those funds up front to live on. Critical illness, heart attack, cancer, stroke, kidney failure, things that don't necessarily kill you right then and there, but it definitely does slow you down. It does affect your income. You can have a mortgage protection plan that protects you. If you had a heart attack, it pays you while you're recovering, so you can use that to pay the mortgage. These are things that they don't want you guys to know about. It's available to you. Terminal illness. This is having a doctor's note say you have 12 months or less to live. They will pay your death benefit up front based off that doctor's note so that you don't have to work. Imagine fighting for your life and still worried about working because you have to make the mortgage payment. They gave you 7 months to live and you still worried about the mortgage payment. Accidental death. I bring that up time and time again because we don't know how we're going to leave this earth. Death by accident, car accident, murder, slip and fall. 4th leading cause of death in this country is accidental death. This is what I call a pretty healthy profile that's available for mortgage protection, and you'll be able to choose if you want term or permanent, your prerogative, depending on age when you meet with the advisor. This is a good one. Let's start from the bottom. Still death benefit, pass away, it pays, chronic illness, critical illness, the same, terminal illness. But now you hear something new, a new term called return of premium. Receive all premiums back if nothing is used. So this is starting to be very popular amongst mortgage protection because they're insurance companies that put return of premium on term products. Return of premium on term products. So because that was one of the negative downfalls with term is that if I don't use it, I lose it. Well, they say, well, what if we give you your money back? Would you consider it? Would you consider being a client? And guess what? A lot of people do. Why is this great? It's great with mortgage protection because you can structure it to where if you can afford it, it's always price conscious when dealing with me, but if you can afford it, you can have it to where after 30 years, if you didn't die and if you didn't get sick, you get a nice bonus mortgage protection policy premiums back. So your home's paid off, you get all your premiums back, and you get a big check. Like that is what we call the win-win-win. That's available. A lot of companies don't tell you about that. We have access to that product. I want to bring up, it's typically a little bit more expensive to get that premium return. We have companies that can give you 100% of your premiums back, 75% of your premiums back, 50% of your premiums back, or you just not choose to have return of premium and save even more money. But want to make sure you guys are in on that secret there. Let's look at this policy profile. Has all the death benefit, the chronic, the critical, the terminal, the accidental, but this one added an accidental disability. So this is if you become disabled from an accident. If you can't do 2 or more of your activities of daily living from an accident. So if you can't bathe yourself, dress yourself, feed yourself, hold your stool or walk, well, this you will actually receive up to $1,800 a month for up to 2 years. Cancer coverage, a standalone cancer plan. 1 in 3 men and women will develop cancer in their lifetime. Mortgages are still affected. The mortgage company still wants their payment. Now you can add a cancer coverage to it that pays you a lump sum that you can use to pay your policy. And we always bring up permanent children coverage, where you can add $10 for $10,000, $20,000 of coverage, because we never want to think about it, but if something happens to our children, we will be out of commission for a while. And we don't want to bring that financial stress to our mortgage, our life, our everything. You can get a plan that you have their children covered as well. And this policy profile here is probably more someone who has medical conditions, because you see the chronic and the critical are gone, but they have the terminal option. And you see the cancer there where they can get cancer protection as well. So this would be probably more on the permanent side of the house for sure. And then it just makes sure it's affordable. We want to always make sure it's affordable. And like I was speaking of earlier, the critical period, maybe this plan is paying the mortgage for 6 months, 12 months, 18 months, 24 months in their budget. Just want to kind of share where you see the policy profile changes is based strictly upon their health. And as you see, this one changed to where it might have had cancer. So now you're getting presented the policy that does not cover if you have cancer. If you get cancer, this one is covering if you pass away, if you become terminally ill, or you have accidental death protection. I really like this a lot dealing with clients 50 and older, where we would do like 12 months of the mortgage payments on the death benefit, but we can do a full mortgage payoff if death is by accident. And it still saves them so much money by combining it that way, to where if death is by accident, your family gets a paid off home. If death is by health, well, then they have 2 years worth of mortgage payments in a lump sum that they can use to pay the mortgage. We don't know how we're going to leave this earth, but this covers really both angles there. Next steps, you know what to do. Hop on my calendar. If you want my help, I would be more than happy to help you, help your family. If you know anyone that needs mortgage protection and needs an advisor that's verified to help you, be more than happy to, myself or my team. And On to the next chapter. Hopefully you're grabbing all these secrets and jotting down notes. See you on the next one. Have a good one.